Hello everybody. How many times when we talk about crypto assets or crypto world, we think about Bitcoin? Well, basically almost every time, or every time. But Bitcoin is not the only cryptocurrency in the world. Is not the only asset that is of interest. And as a matter of fact, it may be that some other assets are already overcoming it. Just for example, last year within last year, Bitcoin rose in price, I think about 900 times. 900%, I'm sorry. At the same time, Ethereum rose in value about 1100%. What does it mean? It means Ethereum is really right behind Bitcoin. And this is what we are going to talk about today. My name is Dr. Leon Rebelsky, and we are continuing our venture into the wonderful world of cryptocurrency and crypto trading. Okay, let me share my screen with you. So, as I said, Bitcoin is being overtaken by Ethereum. There are many different approaches, many different analyses, many different expert opinions that say that due to Ethereum 2 and NFT and DeFi and all this, which we will be talking about a little bit later today, there is a good chance, and actually it's not a chance, it's almost a certainty, that Ethereum will gain the grounds and will reach the capitalization similar to that of Ethereum, of Bitcoin. And even more, the price of Ethereum is going to rise as fast as it did, as the price of Bitcoin rose within the last several years. So today we are going to talk mostly about Ethereum. Well, we will do some review, as usually, what's happening in the markets, and actually some wonderful things are happening. And we will talk about some strategies, things that will help you to not only to know what is happening, but also make it useful for yourself and make money on that. Okay, so let's start from the market this week, and again, as we speak about Bitcoin, Ethereum, Ripple, and Litecoin. Nothing dull as it usually happens, as I've been complaining for the last several weeks that something dull is happening. Well, no more, I guess, no more. Seems like Bitcoin is already really out of the flat region. Yesterday it was all-time high, 63 or so thousand US dollar per one coin, and seems like correction is over. Well, actually I wasn't right. I mean, it does look dull. It looks very similar. Every rise and correction. So if you're an investor, good time to get in. The next stop seems to be at about 70, 75, maybe even more. And in a couple of months, everybody's opinion, people who are in the market, we are approaching 100,000. 4-hour chart of Bitcoin gives lots of opportunity for doing day trading, and I will show you how to do this in a few minutes. And similar for Ethereum, daily chart, similar for Ethereum 4-hour chart. As a matter of fact, if we're talking about trend market, here we continue to trade not only by indicators, but also simply by the trend. And again, I will show you how to do this in a few minutes, and most importantly, how to insure yourself from the situation where the market moves against you. This is one of the most important things, the idea of recovery from a trade that went the wrong way. I mean, you cannot be 100% sure. I mean, there are trades that go your way, there are trades that go against you. But you have to know how to recover, and this is what I'm going to show you to you today. Litecoin, very, very similar. Of course, like always, the next picture is going to, if you didn't see it yet, it's going to really surprise and, I don't know, you'll be astonished. This is Ripple. Okay? Remember when we were talking about very high level of Ripple that was sometime a few months ago? Well, look at it now. And it rose tremendously. It rose tremendously within the last several days. And obviously it's all connected to the fact that the dispute between Ripple and SEC is, I'm not going to say that it's getting into the final stage, but at least Ripple seems like gaining an upper hand in this. First of all, they are getting right now access to the internal records of SEC. SEC always considered, and even in their internal materials, they said Ripple is a digital currency, not a security. And this is very, very big difference. I mean, SEC, it's a security and exchange commission, and it deals with securities, with stocks, with indices, with a lot of things like that, okay? But if it's a digital currency, it's not SEC business. For example, Ripple does not consider Bitcoin and Ethereum to be a security. Not Ripple, I'm sorry. SEC does not consider Bitcoin and Ethereum to be a security. So Ripple says, why us? So we will see, we will have an answer to that in a second. And obviously, as I said, they've been granted permission to access all the communications of the SEC, and that is going to be very, very useful. And the second small victory that they got, well, maybe not that small, that they got is that court denied the request of SEC to provide the personal records of the Ripple founders and executives. I honestly don't know why they needed them, personal banking and financial records. So this request was denied, and obviously this is also good news, and how this good news, all of them reflected on the market, well, you just saw it. Ripple is also to the moon, and we will see more of it, I'm sure, within the next few days. But the story is not over. I mean, we know that. We don't know how it's going to end, but we have hopes right now. Okay? Now, I just want to remind you, I talked about it last time, but I got some questions on the chat, and I got some responses, and I want to go over this again. This is one of the best strategies, in my personal opinion. This is a strategy that's been developed. I mean, it's based on several indicators, technical indicators. The parameters are I was working on these parameters for several years, and I'm going to share them with you in the special session that we're going to have on trading. So what do we need in order to do this? We use long-term trades. That's go by trend. And as I told you, if it goes against you, what you do, you hedge. Hedging meaning you open a trade in the opposite direction. On short term, you do very, very small, minor take profits. And basically, these are the time frames, 4 hours and day. And I'm sure you've seen that these are my favorite time frames. It's actually rather clear. It's understandable. Every technical indicator, whenever it works, the longer the time frame, the better is performance of this indicator. Not unless we're talking about, well, 4 hours and 1 day are the best for technical indicator. That's my opinion. Everything above that, well, it's difficult to see if we're talking about a weekly time frame or a monthly time frame. It's still working, but, well, things could happen in the world that will affect the market development, and these are the things that are not predicted by technical indicators. They are more from the fundamental analysis realm. Just as it's almost a joke, but it's not a joke. For example, when I'm trading forex market, and you know that forex market, unlike cryptocurrency market, is open 5 days a week. It's shut on Saturday and Sunday. I try to close all my trades on Friday. Well, not. I mean, even if I have doubt, even if the trade did not reach the level on which I would like it to be, the take profit on the level at which I would like it to go to, I still close it. Why? Over the weekend, when I do not have access to the market, when I cannot open or close trades, anything could happen. I mean, and we've seen many times that either earthquakes, volcanoes, revolutions, whatever. And there is a special term for this. When the market opens on Monday morning or Sunday night, usually it is, with drastic difference from where it closed on Friday night. It's called gap. Well, it doesn't happen in Bitcoin, in cryptocurrency, because it's open 24/7. You always have access, and you can always change your trade and open new one or close an old one. But still, the longer the period, the more difficult it is to predict how it's going to behave. And on the other hand, the volatility on the smaller time scale, like, for example, when I started trading, not me, but all new traders usually use 15-minute time frame. Well, because you can see in real time what's happening, but the technical indicators do not work as well. They do, but not as well on a lower time scale. So anyway, back to this. We're using 4 hours in daily time frame. We're using Bollinger Band stochastic oscillator with special parameters, and Heiken-Ashi candles. And this is how it looks like. Heiken-Ashi candles are the trend candles. The whites are the bull market. The red ones are bear market. And this is stochastic oscillator. Don't get into too many details right now. But you can see, I mean, it's so obvious on this picture. I mean, you can't, this is actually the picture that was taken last week, so we don't see the rise, this breakout situation with Bitcoin yet. But you can see that it's so obvious and so clear, it's like a textbook. Whenever this happens, market goes up. Whenever this happens and the color changes, market goes down. So basically, on daily time frame and on our 4-hour time frame, this excuse me, this strategy works as a charm, like a charm. So this is something that I really suggest you be using, and it works as well for Ethereum the same way as it does for Bitcoin, and both on daily and 4-hour time frame. And it works for some, not all, other crypto assets. The crypto assets that it works for are the only requirement, the main requirement, is that nothing political is happening around it. Because like we saw in Ripple case, it's not governed by these technical indicators. It's governed purely by the situation with SEC, with US government regulation, and so on. And it doesn't work for the assets that have low trading volume. And that is also obvious. I mean, when for statistical analysis to work best, you have to have significant amount of quantity of events. So it's obvious. Use this strategy and you will be successful, well, 9 times out of 10. Well, actually, with this, the statistics on this, usually if I'm doing daily time frame, about 6 to 8 trades that I open close at the same day. On take profit, 1 or 2 closes within maybe a week or so, and 1 trade stays open for sometimes few weeks, sometimes few months. And that here is a second very, very important advice. It's not an advice, it's a requirement. You trade with small volume. The volume of every trade should be as low as possible that you are able to sustain the movement of market against you, and at the same time significant enough so you can see the profit. Okay, now let's talk about Ethereum. As advertised, let's talk about Ethereum a lot. Ethereum originally, I mean, these are not my words, was meant to be the world's computer. The computer which is based on blockchain. And a huge push to Ethereum case was given by ICO, which happened 3 years ago, the ICO era. Basically, it's not finished. I don't want to say that it's finished, but at least now the coins that are being offered, yeah, by the way, ICO is initial coin offering. What it was and what it is, it's a means of crowdfunding, sort of, or funding the development of a coin. So ICO is meant to be funding, collection of funds for getting a certain coin that it relates to the working condition. And if at the time, like a few years ago, these ICOs were sometimes there was no technology behind a coin at all sometimes, but they were still fashionable and they were still profitable, as a matter of fact. Now all ICOs are very technologically advanced. One of my favorite ones right now, there are a few going on right now. You can see the schedule of ICOs on different informational, economical channels. But my favorite one is a Q-chain. It's a blockchain of 5th generation. It was developed by the department in Qubit Live. And I would really like you to keep a close eye and your good attention on the development of this coin. Ethereum is, going back to Ethereum, is a peer-to-peer network. It exists on blockchain, as I was saying before, and it has its own cryptocurrency, the cryptocurrency called Ether, and it was created actually just a couple of years after Bitcoin was created. The creator is Vitalik Buterin. He is a developer, software developer, and it's the purpose of this particular project was to create a platform for making smart contracts. I mean, that was the first and original project. And it was also, it turns out that it became a good tool for creating, for many projects that are based on Ethereum blockchain. I will talk about it in a second. Now, what do we do if we compare Ethereum and Bitcoin? Bitcoin is a very, very simple blockchain, and a very, very stripped to the bones blockchain. It stores a list of balances and transactions, where the money goes from, where the money goes to, and the amount. Basically, that's all the information that is stored on Bitcoin blockchain. On the other hand, Ethereum blockchain is by design something that it is a platform on which you can save and store different kinds of data. And another difference, major difference between Bitcoin and Ethereum, supply of Bitcoin is only 21 million. No matter what is going to happen, and there are opinions that actually the founders of Bitcoin did not expect such a huge popularity of this asset, and that's why they made a cap for it. But nevertheless, the cap is there. We are at about 19 millions right now, and so the process of mining becoming more and more elaborate and more difficult, but we're approaching 21 million. Ethereum is not capped, is not limited by any specific quantity, which means on one side that it's basically like inflation. It's every time a smart contract is developed or other applications of Ethereum are used, a coin is made. Seems like the more coins, the less price. Ethereum founders and developers actually are taking care of this right now, and that is going to have very positive influence on Ethereum price. They're going to kill and take out of circulation some of the coins. The protocol, the new protocol, is going to take out of circulation some of the coins that are already being used in the process of creating NFT or in DeFi protocol or in doing the smart contract, a smart contract. I said this term smart contract several times already. What is smart contract? First, I'll give you the definition, and then we will go over it in details. Smart contract is simply a computer code that runs on blockchain, and it enables secure value exchange. Smart contract record contracts, again, as I said, is computer code, and this code contains all the conditions of the contract. And when the conditions are met, the contract is activated. Why do we need the smart contracts on blockchain? Let's look at this picture, okay? Traditional contract, you have two parties which agree to something. They make a contract. I mean, it could be anything. It could be sale of a house or delivery of a product or whatever. It doesn't matter what it is. So they agree on a certain transaction, on exchange of goods, exchange of money, on conditions, terms, and all this. They sign a contract, and then there is a third party that makes sure that this contract is executed exactly the same way, exactly the way as it is written there. In other words, if I'm buying, you're selling a car, and I'm buying it, I have to give you money, you have to give me the car. And the process of exchange could be somewhat difficult, because what if I give you money and you don't give me the car? What if you give me the car and I don't pay for it? So this is something that always is in mind of people who are entering into contract relationship. And that is why we always need, in a traditional classical way, we need the third party that is doing the mediation. In smart contract, we don't need this party. All mediation, all assurance, all certainty is provided by the blockchain. By the blockchain, which means by all people in the ecosystem, all people on the network. They all become sort of guarantors of the proper execution of the contract. So when we're talking about a smart contract, the simple way, the way it proceeds is following. Offer comes first. The first party provides the offer, and it describes how, when, all the conditions, like what if this happens, then this happens. So the conditions are provided. negotiation. The second and third and first party are coining out the details of the contract. Then they both approve it, and they consider map out the satisfying conditions. This means that satisfying conditions are the conditions that are accessible, that are good for both parties, and the conditions under which the contract may take place. When it's all done, there is always like what's called the triggering event. The triggering event is an event that actually initiates the blockchain exchange, and after that, it's the contract is executed. Very simple in a way, but it's very, very complicated if you're talking about the real execution of this on a blockchain network. But we don't need to go into details. We don't need to understand how exactly it happens. We just know how. We just have to know how to use it. There are many different ways that smart contracts could be implemented. Many different areas where it could be done. And again, as I said, it's all based on blockchain technology, and it's all based on Ethereum protocol. I mean, digital identity, if you need to be identified as yourself and nobody else is, very important for trading, very important, especially from cross-border payments. This is, it was really pain to do it before. I was a partner in a company a long time ago, which was selling physical metals, and actually my role in the company, I was hedging the physical deliveries with market instruments, and that actually was my first exposure to the market. And but again, I mean, we were selling. The company was selling copper, and another company was buying it. It was like really complicated procedure to make sure that copper goes to a certain place at certain time, and it's paid. And okay, now it's all basically very, very simple. It's all done by the smart contract protocol. Cross-border payments, loan and mortgages, real estate purchases, financial data recording, any government application to our life, like driver's licenses, records, and so on. I mean, all this that you see. Oh yeah, and escrow. Escrow is a very, very big part of any kind of trading, of any kind of financial relationship between parties. So all this could be done on smart contract, and it could be and is done on smart contract. The interesting thing is that the interest toward Ethereum, which is based on technology, and when we talk about altcoins, when we talk about crypto assets, every time I mention one very, very important thing. The value of a crypto asset, of any crypto asset, depends only and solely on the technology that is behind it. Hype is important, hype is nice, I mean, but nevertheless, hype comes and goes. Technology does not disappear. And the technology behind crypto protocol of Ethereum is so strong that attention to this coin is rising and rising constantly. Bitcoin, as I said, climbed 700% since last April, within last year. Ethereum climbed 1100%. And there is one interesting parameter. I mean, it's how many requests and views on YouTube and other streaming channels are made on different applications. And Ethereum beat Bitcoin by very, very, like, about what is it, about 25-30%. 231 million views on Ethereum on YouTube within last year, and only like 200 million on Bitcoin. The fourth, not even close next, is Chainlink and Cardano with 45 and 43 million views. So this actually describes who is the boss in the crypto industry. It's Ethereum and Bitcoin, or Bitcoin and Ethereum, depending which one you like better, depending on how you look at it. Now, I want to share with you opinion. It's not my opinion. It's an opinion of rather very respected and clever and knowledgeable analyst and investor and the TV personality, Mark Cuban. I'm sure all you know his TV program, which is called Shark Tank. So anyway, he's praising Ethereum as some like real currency, a true currency. And in his portfolio, still there are 60% Bitcoin, 30% Ethereum, which is a lot, and the rest is many different smaller cap cryptos. But what is very, very important for us to know, that he is saying, I wish I could turn my attention to Ethereum sooner. And this is something very, very important. I want to move a little bit for a second from talking about Ethereum to like general consideration. Many of us are thinking, oh, if I knew back 2 years ago, 5 years ago, 10 years ago what is going to happen to Bitcoin, my life would have been totally different. Look, with Ethereum, seems like we're going through the same cycle, circle with Ethereum. And maybe this is your second chance. Maybe this is something that you have to jump on, and and I will show you opinion of another very respected analyst in a few minutes, who says that by the year of 2025, Ethereum might be at 100,000. Looks familiar, looks very much like it happened with Bitcoin. How many of you are thinking, oh, if I could buy Bitcoin when it was 2, 3, 5, 10,000? You can buy Ethereum now. I mean, look, it's my opinion. Please don't get back to me if something happens which doesn't go exactly the way we are talking about right now. But still, this is something that you have to keep close look at. And Mark Cuban, very, very respected investor, says, I wish I had bought it sooner. Well, again, as we compared, Ethereum is a currency. He calls Bitcoin simply a store value. And he says that he said it back in 2012. I don't remember that, or maybe I didn't pay much attention back then. And he compares Ethereum to real alternative to gold, not like Bitcoin to real alternative to gold, because of the algorithmic scarcity that we were talking about. Only 21 million, same as gold. Limited gold supply is limited on the earth, whatever. We don't know how much of it is underground, but still, the estimates say that at some point every piece of gold will be mined and taken out on the surface and put in bars. Same with Bitcoin. And another opinion of Mr. Cuban is very, very clear, important, and close to everything that we are talking about. What is a game changer for Ethereum? It's DeFi and NFT. They are both based on smart contracts on Ethereum protocol. What is DeFi? It is decentralized finance. I mean, last year was the rise, rocket rise of different DeFi protocols, different DeFi applications. NFT, I don't even have to tell you what it is. We talked about it a couple of weeks ago. The most common request in Google within, I think, last month or what, I don't remember exactly the period, but the most common request in search request in Google was on NFT. And I'm not talking about crypto only. I'm talking about all together in Google, all requests that there are. NFT, non-fungible token, I just want to remind you what it is. One Bitcoin and another Bitcoin are exactly the same. If you don't look into the blockchain of them, blockchain stores the history, so you know where it comes from, whether it comes from China, or it comes from Canada, or from Russia, or whatever. You can see that. But they worth exactly the same, and they, if you don't go into blockchain, they're undistinguishable. NFT is different. It's non-fungible. You cannot replace one token with another. That's enough said. I don't want to get into that any further. So these things really changed the face of the, not only cryptocurrency, not only crypto assets, but the face of relationship between people. Many artists who were starving for last year or maybe forever, they were able to sell their product as NFT, and it came very, very handy. So DeFi and NFT, what is really behind the rise of Ethereum. Well, should you invest or not? Well, ask what is the reason why you are investing. You're investing for short-term profit, long-term profit. It all depends. Be very, very cautious, because the volatility, as we saw that on the chart, is still very, very high. What can I tell about the volatility? If in the period of correction, the price of an asset like Bitcoin or Ethereum could change by 10%. This is a huge, huge number for a financial asset. When I trade stocks or Forex, the change could be like, if the change is more than 1%, wow, it's huge. And here we can have more than like 10 to even to 15% in some of the correction of Bitcoin recently, and Ethereum as well. So be cautious, very cautious with that. And that also, just to remind you what I was talking about, that you need to select the trading volume very, very carefully. And it should always be based on your balance. Imagine you put 80% of your balance in a trade, and the price changed, went against you by 15%. Well, margin call and tears. So don't do this. Okay. Well, as I already said, the main thing that defines the price, the cost, the value of any crypto asset is the technology behind it. And blockchain technology behind the Ethereum is probably the most advanced right now. And on this technology, many different other applications are based. Don't take my words for it. I'm sure you know that yourself. And that, of course, leads us to the question, well, how far do we go? Are we going to the moon, Mars, or next door? So this is one of the most, I would say, most optimistic predictions, scenarios. And that is done by Brian Schuster of ARK Capital, very respected company. I already mentioned that by 2025, Ethereum should be worth around 100,000. if we're talking about Bitcoin, Bitcoin is dominating the field with 66% of all assets are in Bitcoin. Maybe it will not change. I mean, we know that, and we talked about it many times, that Bitcoin price, people expect it to be in hundreds of thousands, maybe in millions. So, but if the price of Ethereum is going to go up to 100,000, I don't want you and myself or anybody else say, oh, if I only knew that in 2021. Remember what I told you last time or the one before. Some people don't recognize future until it becomes present or even past. So let's look carefully on Ethereum and let's not make a mistake. Not a mistake, it wasn't a mistake. Let's make the right moves right now. And the analysis that Qubit Live, the trading expertise that we provide is very, very useful in that. Now, let's talk about trading strategies that we can use, and that is probably the main portion of today's. I mean, all that we were talking about right now is very, very important, up until now. It's very, very important. You need to understand, this is very, very crucial, that you do understand what is happening, why the price is changing, why, how it's changing, where it is going to go. Well, that is important, and of course it's nice to talk the poolside parties and be an expert in crypto. I mean, I told you already this, if you start talking as an expert with knowing what you're talking about at a poolside party or any kind of parties, within few minutes you will have half of the guests of the party around you listening very, very carefully. And that is pleasant. I don't know, it's pleasant. But we want to not only be pleasant, we want to make money. And that's when the strategy, the understanding of strategy comes in. I will talk about, right today, I will talk about a couple of things. One is the general approach. There are more, I mean, if you listen to different experts, everybody might say differently, might talk about it differently, but that's my opinion. There are four major ways of investing, of trading and investing. One is called hodling. It's basically holding. You buy and hold an asset. Hedging, that is, again, we talked about it already today, that is opening a trade on a way when the market moves against you. Opening a trade in an opposite direction from the direction from where you think it should go. And when we are in the correction, bull run, trend, let's not talk about bull, I mean it could be any kind of direction. When we are in a situation like actually in this back of this slide, when the market moves, corrects itself, this is perfect time to open a trade in the opposite direction, in the direction of correction, with intent to close it when the correction is over. And that gives you additional, sometimes very substantial profit, addition to your profit. Now, scalping is a very, very simple, not simple, simple in principle, in concept technique. You, unlike day trading, you open trades for a very, very short period of time. You do it often. Every trade brings very small profit, but since you do it often and in a day you can make, I don't know, 10, 20, sometimes 100, especially if you are using, like our robots could make as many as 100 of scalping trades, Qubit Live robots. Then it brings at the end of the day a significant profit. Trend trading, again, is very, very similar to hodling, except that, again, as I say, you enter and exit the market when the trend is changing, even if it's changing for a short time. Now, so these are like general understanding of the trading techniques. But now 3 particular advices. One is called, it's an interesting one. It's called dollar cost averaging. Let's say you have $10,000 that you want to invest in Bitcoin. You can go and buy Bitcoin at once, or the dollar cost averaging tells that you buy small portion. For example, you divide it into these $10,000. You divide it in 20 portions, and you buy $500 each, and you buy $500 worth of Bitcoin or Ethereum every day or every week, depending on your plans, at the same time. What it does, like in this picture, in this slide, it averages the price of Bitcoin. It does not let you capitalize on sudden moves in your direction, but it also ensures you from volatility in the opposite direction. This is a very, very good technique, and especially in the trading market. And people are actually calculated that it gives result very, very profitable. Now, another one is, again, we talked about it, but I want to talk about it again, and I will talk about it in future again and again. It's a technique based on moving averages. A moving average is a chart indicator that presents the average price of an asset over a defined period of time. The crossovers between 50 moving averages and 200 moving averages on a daily basis. 50 is when you take 50 days and based your position on moving average on that. 200 is 200 days. So the crossover between these two define the change in the market, and they're called golden cross if the market is going to go up, or a death cross if the market is going to go down. So this is how it looks, and again, you saw this picture, but it is so important that I want to show you, and I will be showing it to you again and again. The same way as with these strategies that I showed you in the beginning, it's self-explanatory. The 50 crosses, the 200 crosses 50 from below, the market going down. It's called divergence. From above, market goes up. It's called convergence. And it happens almost every time when this, and the change in the trend happens every time, almost every time. Never say always, almost every time when something like this is happening. Convergence is a signal that short-term momentum is exceeding long-term, and that is a buy signal. And it means when a lot of buyers go into the market and purchases are higher than sales. And the opposite, when a lot of people sell, leave the market, which means sell, it's a sign for declining of the price. Now, RSI is also, I'm not sure I have enough time to explain this, but I'll try. It's another indicator, and we also talked about it, is relative strength index, is an indicator that measures momentum of the market. And I already talked about it, and I said, I mean, I'm sure you remember the comparison. I mean, it's a lot easier to stop a small car than a truck. Truck is going to go further, and you need to apply a lot more efforts to stop it. Same with the market. RSI is actually the indicator that tells you how high the momentum of the market is right now, whether it's uprising momentum or down-going momentum, and RSI tells you. This is how it looks. I don't think I have much time. I will try to do this next time. I will go over it again next time. But this is how it looks like. RSI is this section of the chart which is down here. It's divided in 3 sections. I will spend a little bit more time next time talking about it. Well, just to remind you, our robots, trading robots, and we have 3 different kinds of them. I strongly advise use Qubit Live robots. They are applied, they are trading on your own platform, on your own account, on the platform of your choice. It's very easy to tune into a robot, and it's very, very effective. Smart robot, and also you can trade the signals. I did not. I have a lot more information for you, but again, I will have to postpone it until next time. But I just want to mention. I mean, Bitcoin became very, very popular. In the last episode of Simpsons, you see right here at the bottom, there is a ticker tape with different assets, and here it says Bitcoin is at infinity. And we know that Simpson often predicted things that nobody could imagine could happen, like Donald Trump being a president and many, many different other things. So let's see. And this is actually, by the way, not the first time that Simpson are talking about Bitcoin. Sheldon Cooper, famous Sheldon Cooper, the character from Big Bang Theory, the genius, very, very clever, the most clever physicist, on one of the episodes of Simpsons, explained what blockchain is and what Bitcoin is. And you know, the funny thing is that he did it very, very professionally. The character, the Simpsons, did it very professionally. And even if you didn't know what it was, after you watch this episode, you would understand exactly what it is. So next time I will talk more about regulations, because this is what I prepared for you, but sorry, I don't have time for this. Just one thing that I want to say here, that one of the big supposedly negative sides of crypto, and not only Bitcoin, but all crypto, is that it could be used for illegal activities. So former acting director of CIA, Michael Morrell, says, no, not so. The generalization is too broad, and even more, blockchain technology allows special companies like, special agencies like CIA or FBI or other country agencies to get into the real down to the origin of any activity that's going on. But we'll talk about it next time a lot more. Don't miss the train. I mean, Ethereum train is about to leave. I want you to on this train. Qubit Live wants you on this train. And Qubit Live wants you to be one of the future billionaires, and you can do this. And there are 12 crypto billionaires on the latest Forbes list of the wealthiest billionaires. I want you to be there. We all want you to be there. Thank you to these sources, and I will see you next time. Thank you very much, Dr. Leon Rebelsky. Good trading, successful trading to you, either yourself or with robots or with signals. In any way, we wish you very, very prosperous week. Goodbye.